one thing they've done, and many other countries I think in the region have increased also, is transfer pricing documentation requirements. How is that developing from your perspective? Is transfer pricing getting easier to manage? Is it more predictable than it used to be, or is it getting more difficult?
Well, transfer pricing is getting more cumbersome. So many more countries right now are requiring contemporaneous documentation. And I think the idea that you want to have a taxpayer that's looked at their tax transfer pricing situation and has figured out the right answer at the time they file the tax return is correct. But when that is expanded to say we need to have an economic study for every business line, for every country, and for every year, that becomes an enormous paperwork challenge. I just have never been in an audit situation where the tax auditor said, is that the right transfer pricing model and method, and we gave them a report prepared by ourselves or by some third party, and they said, oh, this is good, now we take the box and we won't have to pursue it. It's never like that. Instead, they're just checking to see whether you've done something that will prevent them from imposing further penalties. After that, though, they still look at it and they don't treat that study as having any particular weight. So in that sense, I feel like the requirement to do all of these studies is really just a full Employment for Tax Advisors Act. I mean, it's enormously expensive, and it doesn't actually help either the government or the taxpayers very much.
Mm-hmm. Could you see a rational basis for global formulary apportionment if you could get OECD or some other G20 or whatever to all buy in?
Well, I think that question is assuming an impossible. A friend of mine one time said that she was talking to some law professors and they listened to all these problems with international tax, and they said, well, don't you think it would be wise to just give all taxing authority to the United Nations? The United Nations will collect all taxes from everywhere in the world and will redistribute it to all people and all governments. Well, that was a very interesting but totally unrealistic thing. And in the same way, I think formulary apportionment, given the strong ingrained system that we have right now for arm's length, to move that to formulary apportionment would be a very, very, very painful process. And so without regard to the benefits or detriments of it, I think that it's unrealistic and probably not the right way for the world to go.
Okay. Banks, post-financial crisis, do you feel there's any scapegoating going on with, say, equity swaps or the use of tax haven jurisdictions, tax planning in general in the international arena?
Oh, absolutely. I mean, the U.S. General Accounting Office came out with a study that said, how many tax haven companies exist in a company's chain, and then they list the number, and somehow that's going to be evidence that you've done tax avoidance. But in fact, that's not right. I mean, there's lots of circumstances in which you want to have a holding company in your chain, which logically would be in a tax-neutral country. You're not going to put that holding company in a jurisdiction that's going to attract a whole bunch of tax when you pay the dividends through. So you have to put it in a neutral jurisdiction. But it's there for non-tax reasons. It's just holding. A tax haven company is a problem if there's money there, not if it exists. And so there's lots of non-tax reasons why you want to just have a centralized holding company. Morgan Stanley has a fair number of them, but we don't hide any money in a Cayman company. So in that sense, I don't really see what the problem is, and yet I think that a lot of political pressure exists to try to embarrass banks, and some of it is reasonable, but then a lot of it is overstepping and unreasonable.
Hong Kong, where we're sitting now, I don't know if the video viewers can see the spectacular view we have here, but Hong Kong is a low tax jurisdiction. Singapore is another one. They're also the two most commonly used financial center bases for regional headquarters.
Right.
So they're not like the Cayman Islands where it's just beaches and palm trees. Do you see, between those two, is either one gaining the upper hand from a tax incentive or tax attractiveness point of view, and predictability, or just low?
I think that Singapore and Hong Kong are both far, far more predictable than any other significant tax jurisdiction in Asia. I think that both of them are getting a little more difficult than they used to be. And if I was running those two countries, I probably would sort of take my foot off the pedal a little bit from some of the aggressive enforcement activities that we've seen in both of those countries. But at the same time, there's such a gap between them and the next countries that it's hard to see that many people are going to be leaving Hong Kong or leaving Singapore because they're worried about an overly aggressive tax enforcement. Unless they're talking about comparing the two to each other, because somebody could leave one country to go to the other. there's a big inertia in a business, and to create tax incentives to move from one to the other is very unusual.
Mhm.
Could happen. I think Singapore is very effective at finding opportunities to attract businesses to go to Singapore. So there have been a number of situations in the past when there was a tax problem in Hong Kong, the Singapore government jumped right on it and tried to pull Hong Kong business into Singapore, and they've done that reasonably effectively.
Okay, well, I think our time's about up. Thank you very much for being with us.
Great.
And that's another version of the International Tax Post video segment. Thanks for watching.